Joining us now from the CME is R.J. O'Brien, Managing Director John Brady. John, at least the U.S. futures aren't selling off. That's about the only thing we have to hang our hat on at this point.
That's right, Dig. You know, last night we certainly opened up a little bit lower, but I think a lot of that had to do with the fact that Tokyo was closed, and so there was thin market conditions early in trade last night. But we have sort of found our feet and have bounced a little bit. In fact, E-mini S&P futures have bounced up towards the 1928, 1929 level, which was sort of a breakdown level from the late Friday trade, and overnight volumes have been rather decent. Now, most short-term technical indicators are flashing rather oversold levels in here, and we are coming into earnings week where sort of average earnings expectations are supposed to be down 4.1% for the second consecutive quarter. But if you strip out energy, earnings are expected to be closer to up 1.5%. So between sort of short-term technical indicators flashing oversold, maybe Tokyo being closed a little bit at night, lending itself to some illiquidity, and the bounce here in equity futures, we are going to start off with a very modest positive tone.
Anthony, I want to read something that Charlie Gasparino has been talking about, that most of the people he talks to are selling inventory, moving into cash. They're looking to sell out of positions that stunk. I changed his word. And because of it stunk last year, and because of uncertainty now, a lot of future out there. He's talking about these hedge funds. Do you see that, Anthony? I mean, this is your bread and butter.
Listen, there's no question that the hedge fund industry has underperformed, at least in the last year. And so you are seeing a rotation back into structured credit. You're seeing a rotation back into fixed income, and you see guys like Mark Lazary at Avenue Capital moving into what would be the energy distress space. And so a lot of guys that were in the healthcare sector that actually got the merger activity right, Dagan, but because of the politics and because of that famous tweet from Secretary Clinton earlier last year talking about the drug prices in the future, those stocks did not do well. And so there's definitely a lot of uncertainty. You brought up the point about a lot of cash being raised, and I think that's true for the industry as well, hedge funds.
Right, cash levels, the story in the Wall Street Journal today, cash levels in pension funds are the highest that they've been. They've sold about, pensions and mutual funds sold about $200 billion in securities, raising cash just since 2014. Highest in pension funds, the cash is, since at least 2004.
Right, so that's actually a bullish sign. That just means there's cash on the sidelines, means any glimmer of good news, they'll start to allocate back into stocks.
Yeah, people are trying to see those factors, right, that are going to give the upside move, because there are a lot of risk factors right now implying a downside move. I mean, chances are that China could get worse before it gets better. U.S. markets are still trading at a historically high valuation basis. So we're trying to figure out how the stronger dollar is going to impact earnings as well as the price of oil. And we just talked about that, right? We were in an earnings recession, actually. We're having 3 quarters where earnings have gone down. So people want to be in companies that are growing their revenues, and there's very few of those. So there are overhangs, and we're going to need to see what happens in earnings cycle. And it's not the earnings, actually. It's going to be the guidance, and that's what's going to drive market action.
Well, speaking of driving action, Megan, Anthony brought this up, but you have, it's the hot point of the political season, and you have candidates who feel compelled, both on the right and the left, to talk about these markets. You have Donald Trump throwing out the idea of a 45% tariff on imported Chinese goods, and he kind of qualified that, saying that's if China doesn't play right with its currency. But again, that's a risk, and it actually causes more uncertainty, just all the headlines.
Listen, I'm not like you guys. I don't specialize in finance by any means, but Donald Trump makes things easy and accessible, and he talks in platitudes and hubris and makes it sound like he's going to fix everything really easily. You're telling me that's a risky move. He's telling the American public it's something simple and he's going to fix all our problems. It's working, though. He's making it simple. He's making it easy. People are sick of being talked down to, and they know the last 8 years, the economy is still not doing well, and they want to feel safe, and Donald Trump is telling them everything they want to hear, but kind of like the guy you start dating and everything's perfect and he loves you immediately. Probably it's too good to be true.
Yeah, well, I predicted this was the summer, on Greg Gutfeld's show over Labor Day, I predicted this was the summer romance that was going to be over in terms of Trump, and I was so wrong about that he's gained and gained and gained. And John, I want to bring in this point of, it's hard to quantify the headline risk, but is there risk, and is that another reason to maybe carry more cash going into this year?
No, I think that's right. You're not going to get paid a whole lot for cash, but you're not going to lose a whole lot either, specifically given the inflationary backdrop. Once upon a time, before this quantitative easing and zero interest rate policy, cash would actually earn interest, which would act as a way to sort of diversify risk and to lower the overall volatility of a portfolio. It still can. You just don't get paid as much for it anymore. But one thing that clients are talking about this morning, Dagan, is the fact that both the U.S. dollar and gold are moving higher, and they've been moving higher for the better part of the last week, which suggests that in the near term, risk will still be under pressure most likely. You're seeing a flight to quality of the dollar, and you're seeing a flight to quality of the second most important global currency, which is gold. So keep an eye on that relationship.
John, thanks for being here. Good to see you as always. John Brady.
Thanks, Dagan. You bet.